All right, folks, buckle up. We got a lot to talk about, and this video might be one of the longest ones I've ever put out. We have a lot to discuss with KEEL Infrastructure. I'm going to break this video down in 3 slices here. So the first slice is going to be why in the world in the first place am I in, or why did I specifically invest in KEEL Infrastructure? The second part of the video is going to be the people that are selling KEEL Infrastructure and the ones that jumped in, why they jumped in, and then they're pissed off, they sold it, they're giving up. We're going to talk about that too, because I got a lot to say about that. And then finally, we're going to talk about, does KEEL have a debt problem? So I'm going to break down, and shout out to one of the members in the Discord. He gave me a snapshot of this breakdown, and I'm going to post it on screen and kind of break everything down for you guys and just give you a top-down look at KEEL's debt and the potential deals that they could sign with their 3 sites, which being Moses Lake, Sharon, and Panther Creek. Kind of what kind of deal they need to have to be able to pay their debt down in a timely manner, how much debt they got to cash. We're going to go over all that, right? But we're going to start the video out just reminding everybody, and really reminding myself as well, why am I in KEEL Infrastructure in the first place? So that's where we're going to start. If y'all are new here, please consider hitting the like, hit that subscribe button. As y'all seen my video yesterday, YouTube is screwing the smaller content creators. They're bumping everything up, making it harder to get monetized. You know, I'm almost there with watch hours, so if y'all want to play this video in the background 10 times, I would greatly appreciate it and help me. I'm almost through the 4,000 watch hours, and that would I would greatly appreciate that. But like I said, this is going to be a longer video, and I hope y'all enjoy it, and I hope y'all get something out of it, because I think it's very, very important, especially in the time that we're in right now with KEEL Infrastructure after their Q2 earnings, which really upset a lot of people. Why am I in KEEL Infrastructure? So going back months ago, you know, really when the market was flying high at all-time highs, the AI bubble was going crazy, all the, names were at all-time highs, I ran across a name called KEEL Infrastructure, right? And it was a company that was getting out of Bitcoin mining and transitioning fully into AI infrastructure. And at the time, that's the plays I was looking for. I was looking in that space, kind of looking for an early company, pre-build out, pre-re-rate, and just looking for a risky opportunity, right? A risky opportunity to make multiples on my money. And I ran across KEEL. And when I ran across KEEL, nobody was talking about it. It was flying under the radar. Nobody was talking about it. You know, I listened to a bunch of Ben's interviews. I seen their vision. I seen what they were doing. I seen their property that they owned. I seen their power pipeline that they owned. The only thing that they were lacking were lease deals, right? That's the only thing that they were lacking. And really, they didn't really start on construction yet when I got in. And literally, come to find out, after I bought in, this thing blew up. But that was the main reason why I got in, is I was looking for a play in the AI markets, in the data center markets, because I believe that power and data center infrastructure is going to be the next AI bottleneck. As I've said in plenty of videos, we have all seen what happened to the memory names, right? When there was finally a memory shortage, those memory companies, Micron, SanDisk, insert whatever name you want, absolutely skyrocketed, right? So my belief is that power and infrastructure is going to be the next bottleneck. And that's the whole sole reason I am in KEEL Infrastructure, and that I believe in their vision. I wanted to place a bet in this sector, a risky bet. A company that has yet to build anything, a company that has yet to sign any deals, a company that has yet to do anything, because that's where you can make life-changing money if you make those bets and you sit in those bets and let the thesis play out. You can't get shook. You can't get, I don't like that news, so I'm giving up on them. That's not how you're going to make multiples on your money. You're going to have to go through the bad. You're going to have to go through the good. That's just how it is when you're investing in risky names. But anyway, that's the overview of why I'm invested in KEEL Infrastructure. And I'd just like to remind myself of that and other people of that, because when it's the fresh, new, shiny thing, everybody's excited about it, right? Everybody's like, KEEL Infrastructure is the next big thing. Nothing can go wrong. Nothing can break this thesis. Nothing can make me sell. I'm not selling. But then when you get a little bit of bad news and something don't go people's way, fuck KEEL Infrastructure. Ben's a scammer. You know, they're a terrible company. They don't know what they're doing. Shit changes on a dime with some investors. And that's going to lead us into our next point about people giving up and selling KEEL Infrastructure. Just going back 2 weeks, not even 2 weeks, a week ago. Let's just flash back to a week ago. The week before KEEL Infrastructure came out with their Q2 earnings. The KEEL community was great. Every video that I posted, people were bullish. People, nothing could stop KEEL. Nothing's going to make me sell KEEL Infrastructure. I'm giving them till such and such time. I'm not worried. And then earnings comes out. And it wasn't the earnings that people expected. And leading up to the earnings, I was telling people on these videos, guys, get your expectations in order. You cannot set your expectations on what you think should happen. You have to set your expectations on what the company has guided for, right? And the hype got so overblown, and I understand it. Everybody was excited about KEEL, and everybody set their expectations miles above where they should have been. And that's really their own fault. But Q2 earnings comes out. They didn't announce any lease deals, but they did give updates on Moses Lake and all their other, situations. After that happened, the community did a complete 180. I mean, in that video that I posted, there were so many people, I'm giving up on KEEL, Ben's a piece of shit, and this is the funny thing. So I have the ability in the YouTube studio. So when people leave comments, I can click on their profile picture and it pulls up their past comments from other videos, right? 95% of the people that commented, I'm giving up on KEEL, I'm selling my shares, just 2 weeks prior, they were saying, oh, I believe KEEL's the next big thing. I'm giving them, 90 days. I'm giving them, however time. I'm so bullish on KEEL. I'm buying the dip. I'm doing this. I'm doing that. And then one piece of bad news, and guess what? They're out. They're out. And if that's you in the comments, look, I'm not doing it to pick on anybody. I'm not doing it to single anybody out. I'm just saying that's the kind of mindset that can get you missing an opportunity. Here's the thing, man. When you invest in a small startup company, they're not able to build a data center in a month. This isn't a quick flip, right? And that's where people got this wrong. And the number one biggest problem that happened is 80% of the investors in KEEL Infrastructure followed Leopold and situational awareness fund into KEEL Infrastructure. That is what happened. And then when Leopold's portfolio blew up, guess what? Everybody that followed Leopold into the trade got bearish on the trade. You know why? Because they didn't build their own conviction. They're getting led around like a bunch of blind sheep, following people into trades, not knowing how to research a company, not knowing how to build conviction in a company. And that's exactly how you lose money. That's exactly how you fail. That's exactly how you're never, ever, ever going to make multiples on your money. Now listen, if some of y'all in the comments, have some of y'all maybe made multiples? Yeah, you could have. You could have got lucky. You could have gotten lucky. That is what has hurt KEEL Infrastructure, is a big investor jumped in and everybody followed him like a bunch of blind sheep. Nobody did the research. Nobody built their own conviction. So as soon as they hear one little piece of bad news, shit, they're gone. And just a week before, they were bullish as all hell on KEEL Infrastructure. It's so crazy to see how quick people turn. Things don't go their way. And if they had built their own conviction, they would know, or at least they would feel inside of them, that KEEL Infrastructure still has a chance. 2026 is not over. There's a lot of shit that can still happen. It don't upset me, but it makes me just want to grab people and shake them, because it's like, dude, you could miss out on so much. Now look, could KEEL flop? Like I say in every video, could KEEL turn out to be a bust? Could KEEL turn out to go bankrupt? Could KEEL be the biggest bullshit company of the year? Could it be the biggest, worst investment I've ever made? Yes, it could. But there's a difference. I have built my own conviction, and I believe 100% that they will execute. And I'm willing to hold until I have a reason not to. And the Q2 earnings that just happened was not a reason to sell at all. You still have big firms coming out with buy ratings on KEEL because they know what's up. They know what's happening. There's an overwhelmingly support for KEEL Infrastructure in the bigger investment community, right? And then I've seen another comment saying bigger investors are dumping out of KEEL. No, they're not. I don't know where some people are getting their information from, but that's exactly why people need to do their own research. Right? They don't need to blindly follow people on YouTube. And another thing, if you guys are on here just strictly following my trade and what I'm doing, you shouldn't do that either. I'm just on here, sharing my journey and sharing what I'm doing with you guys. I'm not on here telling you to hold. I'm not on here telling you to buy. I'm not on here giving financial advice. I'm on here showing people a trade that I have made, that I have high conviction in, and that I think can really, really deliver, right? And if it just so happens that my community rallies behind that trade and wants to get in after they do their own research, by all means, that's what this information is here for, to help you on your journey with the research, right? There's a guy in the Discord, and shout out to him, man. He does all kind of research, and this is the kind of stuff I'm talking about. He has so much conviction in KEEL Infrastructure, just like I do. He's constantly posting video or pictures in the Discord of research he's done on and like I said, some of the debt stuff we're going to talk about, it's the research that he did. Like, that's the kind of conviction you need to have in a company when you're investing in small caps. Small caps are not a quick yes, they can trade. Yes, you can trade small caps and you can jump in and out and jump in and out. But if you're wanting to, make life-changing money, you have to buy and hold shares. You can't just jump in and out, in and out, in and out. You can't do that if you're wanting to make life-changing money. If you want to jump in and out, trade the bigger names. But it all goes down to this, right? It's just wild to see that in the beginning, everybody was so bullish on KEEL Infrastructure. Everybody was giving them, nothing can touch it, nothing can break the thesis, nothing's going to make me sell, nothing's going to do this, nothing's going to do that. And then in an instant, everything changes and people are dumping because, like I said, it's a lack of conviction. And it's just sad to see. It's sad to see because if KEEL does pop off, I'm going to feel sorry for them because they were in it at a good price. They were in it before the big boom came. They were in it. They had the shares. And they're really going to be kicking themselves in the ass if they see KEEL one day at $20, $25 and they were in it at $3. It's just and I get it. Some people don't want to take that risk. And I understand that, right? If it was too risky for you and you sold, I'm not talking to you, right? I'm talking to the people that jumped in all hell bullish and then jumped out because they heard one piece of bad news. I'm not talking about the people that were like, yeah, I got into KEEL thinking, it was for me, and then it turned out to be a little bit too risky and I sold. I understand that. I can understand that, and I respect that. I don't know. I just felt like I needed to come on here and say that because it's important, man. It's important to understand building conviction in a company is the number one rule of investing. And if you're just going to follow people blindly into trades, you're never going to make money. You might get lucky, but that luck is going to turn eventually. You have to do your own you have to have your own thesis on investments, especially with small caps, especially in small caps. So, but anyway, we're going to jump over to the KEEL debt now. And I'm going to read and I'm going to post, break this up in sections and post it on the screen for you guys. And we're going to go over everything because after this Q2 earnings, I have heard people say, KEEL's got a debt problem. KEEL is, they got some runway, but they're bleeding money. They're doing this, they're doing that. And, I just want to show some research to counteract that a little bit. So first off, just the debt and cash snapshot for KEEL, and I'll post it up on screen as I read so you guys can read along. So KEEL has about let's just say $1 billion in total debt and roughly $698 million in cash. That leaves them with around $350 million in net debt. The interest rate on most of that debt is very low, about 1.25, 1.375. So annual interest is only around 13 to 15 million. They don't need to wipe out the whole debt overnight. They just need steady revenue and signed leases so they can refinance and pay it down over time. And that's what I was saying in my other video. They have to, by the end of 2026, they have to have a lease deal signed, because they're gonna need revenue. They've decommissioned all of their Bitcoin mining and all of their cash flow coming in. And that leads me to another reason why I believe that they're gonna have a lease deal signed, and that they're very confident in having a lease deal signed, because they're not just gonna cut off all their revenue and just sit there and bleed money. At least I wouldn't think so, right? Could I be wrong? I could be, but I wouldn't think they're doing that. I really think they have high confidence that some revenue is going to be coming in soon, and that's why they've decommissioned all of their BTC mining in the US. All right, and then we're going to jump to, so I'm going to post this up here, the 3 sites ready for 2027. And this is where my thesis comes into play. This is why I bought call options for 2028, or leap options, is because of this right here. So the 3 sites ready for 2027. These are the only sites with secured power and realistic 2027 timelines. Moses Lake, Washington, 18 megawatts. Smallest but furthest along, expected to be first online. And that's what, we've covered on this channel. We've seen the construction. There's already been stuff delivered. Vertiv is already on site helping them with the infrastructure. So that's Moses Lake. Sharon, 110 megawatts. Solid mid-sized site. Zoning and land development already approved. So, that's far along. They're almost on step with the Moses Lake. And then Panther Creek, which is their flagship site. 350 megawatts, can expect towards 500 megawatts with expansion. The big flagship site, most important for long-term value. So yeah, Panther Creek is going to be their set in stone site. That's really going to be the driver of future revenue in the future. And, hopefully they have some of Panther Creek online by 2027. All right. So now we're going to post up their realistic revenue expectations at each property, starting with the bear case with the best case, revenue-wise and deal-wise. So realistic revenue once leased. So using current market rates for AI and HPC data center deals. So this is current rates, right? So this could also rise in the future, because the prices are rising because of the bottleneck on these deals. So site, Moses Lake, 18 megawatts. The lowest case would be 22 to 26 million a year. Mid case would be 30 to 32 million a year, and best case would be 37 to 43 million dollars in revenue per year. Sharon would be 158 million a year, low case. Mid case would be 190 to 210 million a year, and best case would be 225 to 260 million dollars a year. Now look at the difference between those two and Panther Creek. Panther Creek, for the bear case, 500 to 520 million a year. Mid case, 600 to 670 million a year. And best case, which I really think they could do, because they are taking their time and not capping the upside, is 750 to 1 billion in revenue a year with expansion. So combined mid cases, roughly 820 to 910 million in annual revenue once all 3 sites are fully leased and online. So by the end of 2027, if they do have these sites online, they could be almost upward of $1 billion in annual revenue. That was only averaging the mid case. So if they say the prices keep rising for the leases and they get the best case scenario with these deals, they could be pushing $1 billion in annual revenue by the end of 2027. If everything falls as planned, right? Or at least by mid to late 2028. And that is the thesis in a nutshell. That is why I'm investing in KEEL Infrastructure, because I believe they can do it. I believe they can do it. So let's just what this means. So what does these numbers mean? Why is it important? Why is the debt important? So even the mid-case numbers are more than enough to cover interest, operating costs, and still leave significant cash flow. Signed leases also make it much easier to get project level financing, which would take pressure off the main balance sheet. Best realistic goal for KEEL: lock in solid mid to upper pricing deals, especially on Sharon and Panther Creek, because they're more. Moses Lake isn't going to really take into account that much because it's only 18 megawatts, and that's gross. So their lease isn't going to be for 18 megawatts. It's going to be for like probably anywhere from 12 to 14. So lock in solid mid to upper pricing deals, especially for Sharon and Panther Creek, with strong credit tenants, long-term leases. Speed matters most at Moses Lake. Value matters most at the two bigger Pennsylvania sites. So what that means by speed matters most at Moses Lake, it's important to get them on to get some revenue coming in. But to take your time with the bigger sites, because those are going to matter more. Because you got to keep in mind, these leases aren't just a 1, 2, 3 year kind of deal. These leases are 15-year deals. These are long-term deals. So you want to get the best deal you can. And that's why Ben is kind of taking his time, because he wants to get the best deal for shareholders that he possibly can. And I think he can, and I think he will. You know, we need to get Moses Lake online by the end of this year. Get Moses Lake, or not online, but get Moses Lake signed by the end of the year to have some revenue coming in. And then take your time on Sharon and Panther Creek to really get the value that we need and the best cases that we need moving forward. And then that way it's a easy debt payoff. They're not bleeding money. You know, and again, their interest rate on their debt is very, very low. Very, very low. Like, so, I mean, it said they were paying like 13 to 15 million a year in just in the interest. So it's very minimal. Very minimal. So that's the overview, guys. That is the overview of today's video. I know it's kind of long-winded. I might break this down into separate videos and post them on the channel, but I want to release it all as one because there's a lot of good information in here. And I really do think KEEL is still on the right track, right? A lot of people are going to probably jump in the comments and talk shit and post some hate, and I don't care. I don't care. I'm so over it, man. I'm so over it. The people that are jumping in, I don't even care, because they're not serious. So if you are down in the comments and you are a KEEL investor, don't let these bears and these fudders get in your head. Don't do it. It's not worth it, because 90% of them haven't done their research, and 90% of them haven't built a thesis, and 90% of them haven't had conviction in a company. They're just following people like blind sheep. So keep that in mind when you're down in the comments. And, you know, the core KEEL community is still here, right? The people that have done the research and the people that have built their conviction, they're still here. I see it. I see it everywhere. So I'm not worried about KEEL. The only people that have jumped out are the people that follow hype, and that's fine with me. We'll get those people out, shake out the weak hands, as they say, and, you know, keep building from there. So hope you all enjoyed the video, man. Smash the like, hit the subscribe. I'll probably lose some subscribers after this video for keeping it real, but it is what it is. That's what you're going to get here on this channel. I'm not going to blow smoke up people's asses, and I'm not going to put fluff and build hype around anything. That's just the raw, real truth. And I hope y'all respect it, and I hope y'all enjoy it. And that's kind of why I built this channel, is to just be real, raw, and truthful. So hope y'all enjoyed the video. Leave a like, leave a comment, subscribe. We'll see you on the next one.